And good morning and good afternoon to those of you who are already in lunch hour. I'm excited to be here. I'm excited to have you here. I'm excited to introduce how you're going to trade options in just minutes a day. And literally, I mean minutes. I'll demonstrate this all to you today. Let me stop here. Let's throw up the risk disclaimer. I think we're familiar with this, but while I'm doing this, please let me know you can hear me just fine. Sometimes I get into the presentation 5-10 minutes and realize that nobody can hear me. Raise your hand or open up that questions pane. Let me know you hear me just fine, and we'll start here shortly. Awesome. Thanks, Richard, Kurt, Bernard, Norm. Welcome. I'm glad, like I said, I'm glad you're taking time out of your day, and I appreciate you taking time out of your day. I think you're really going to enjoy what you see today. The risk disclaimer's in front of you. I think you've had a chance to read that, but there is risk of loss in trading commodity futures and options, and it can be substantial. All funds committed should be purely risk capital, and past performance is certainly no guarantee of future results. And again, I know you guys know this, but it's a good reminder for us as we discuss trading today. Now, I have a couple goals. I want to reveal this secret weapon that's going to help you trade options in just minutes. Same type things that the institutions are using. I'm going to reveal something valuable and immediately accessible to you. This is designed to save you time, grief, aggravation, and money. Now, I know the biggest hurdle I have here is keeping your attention, and that's because there's lots to do while you sit and listen to a webinar. I'd much prefer to stand in front of you and go back and forth and answer questions. But being that we're behind a screen, I promise you, if you'll stay with me, you'll experience something new and valuable. You'll have that aha moment where you find that thing that you didn't even know it existed. This is really going to inspire you here. I'll also help you gain insight into your own trading. Now, with that said, there's a questions pane. Some of you use it, say hi, everything else, and I appreciate that. As you have questions when we go through this, I want to make this as interactive as possible. I am behind a computer screen, so the only way we can interact that way is if you guys chime in with questions. I'll do my best to circle back as I go through portions of this presentation and answer and address those questions. Especially when we get into demo, throw those in there. I want to be able to answer your questions, and at the same time, your question is probably a question somebody else has. So take advantage of that tool there. Now, I also understand when you listen to a webinar, you're thinking, yeah, what makes you any different than the last one I listened to? Well, really, everything does. We provide only what you need, what works, and nothing more. Not going to provide you a whole bunch of bells and whistles you simply just don't need. Now, this is me. I'm Jim Henderson. I've been in this industry since 2004. I've had a chance to be in nearly every state teaching these principles on options trading, helping people see how easy option trading can be in just minutes a day rather than staring at a computer all day. Now, I'm excited to introduce that, as I've said to you. A little bit about our company. Altavis has been in business since 1997. We've traded over the years countless contracts at options. Our staff are all Series 3 licensed with a minimum of 13 years of experience. We have staff in California, Utah, and Illinois. I'm actually in the Utah side, and it's just finally starting to warm up. So I don't know where you're all from, but hopefully you got better weather than we've had. We've had a ton of snow this year, but I think it's going to be our warmest day of the year at 70. So I'm kind of looking forward to that. Now, my one visual I really like to use when I'm presenting is this. Is this the guy you are looking to be? Are you looking to be this mad scientist coming in this class to learn some information and take it and build it into your own device of whatever you're building for your trading, or are you looking to learn from those who have already done this? I think if we were standing in front of each other, you'd all be raising your hand saying, hey, I want to learn from a guy that's already done this. And that's really what you're going to get today. You're going to get the experience we've had since 1997. I mean, think about it. We've done a lot of things right since that period of time, right? We've also seen and experienced and done a number of things wrong, right? Thomas Edison says, I have not failed. I've just found 10,000 ways that won't work. How true is that when it comes to trading? And how much are you going to be able to benefit from the years of trading that we've done and the experiences we've had. When I say your experience is at advantage, I love to compare the farmers commercials, right? I don't know if you pay attention to those on TV, but they always catch my attention because they're pretty silly, pretty funny, right? But they know a thing or two because they've seen a thing or two. And the scenarios they give you in their commercials seem crazy, right? But I would bet that they've actually experienced that situation and they've thrown it into a commercial. And the idea is they've been around. They've seen a thing or two, so they know a thing or two, and that's exactly what you're going to get here. We've been around. We've done similar trading. We've put all of our mistakes and gains into a platform that you guys are going to be able to trade and trade effectively and love in minutes a day. So we're bottling up those mistakes, as I've said, we're throwing them overboard, and we're going to focus on the things that work. Now, I will probably reflect on this slide a few times. This is simple. It's designed to be that way. It's for the pros as well as the most novice traders. So whether you fit either end of the spectrum, you're in the right place. It is designed to save you time. You do not need to sit in front of your computer screen all day. And whether you're already doing that or not, if you're doing that, you don't need to apply or be able to have an additional 30 minutes or 40 minutes or whatever to be able to apply this. Minutes a day. Now, we've learned a few secrets of trading success, especially when it comes to options. Experience and education really do matter. We've traded millions of options over the years. We've seen a lot. We're making that experience available to you in one place. This was me when I first got started. I learned options and found them very easy in the beginning. I didn't know enough to know what to avoid and quickly watched all of the profits wash away. When I talk about experience, you'll have people like Steve Paoletti, who's been on the S&P trading floor for nearly 40 years. Our head of operations, Charles Starnes, 33 years of industry experience. Mike Armbruster, 24 years of experience, and Eric Gebhardt, 27 years of industry experience. You're going to have access to experience like that. Now, secret number 2, full-time trading is not glamorous. You all have day jobs, family lives, other interests, things that you probably really want to spend your time doing. Do you really want to spend it all trading? This is your professional trader. This is what he or she looks like, right? Whether it's a dozen monitors or just a couple. The idea is they're sitting, staring, and looking at that computer all day long. Is this what you love to do? Is this your passion? Is this what you want to do all day long versus anything else? Or is it the freedom that this seems to feel it brings to us by being able to control our time in trading? Whether it's a beach or other destination, I think you get the idea. I think we're looking for that flexibility, that ease on our time frame where we can do our own thing because our money's working for us, right? And secret number 3, I want you to really think about this because we're going to go through a few things. Can you pick the market direction? And how good are you at doing that, right? The trading strategies that always rely upon picking an up-down market direction requires that you do correctly all of the following every time. So every time you need to pick the correct stock or market, you need to every time choose the correct market direction, build that strategy, enter at the right time, enter at the right price, and be able to manage your gains and risks every time, right? How good are the pros or the experts at doing this? How good are their crystal balls? These are some of my favorites, right? And we could throw up a bunch here, but 1988, the internet will have no impact on investing. Paul Krugman, a Nobel Prize winning economist. January 2013, and we can listen to several of these type stock picks, but Netflix is still way overvalued, and we all know the story of Netflix. 2008, a lot of you are familiar with that period of time when it comes to trading. Here's Jim Cramer. Everybody knows him. He's got a show in the morning. He's got a show in the afternoon. And a concerned caller says, should I be worried about Bear Stearns? And Cramer's answer was simply, no, 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 don't move your money from Bear. Okay, we all know what happened to Bear. So is this helpful? Here's an interesting study that was done on some of Cramer's picks, and I'm not bringing him on here to pick on him. He's a pro. He's in this industry. He lives and sleeps and drinks or whatever you want to refer to that as. He's in it, right? All day long. His job is to provide us information. Somebody ran a test and on April 6th bought $1,000 of each security on Cramer's list in a paper trading account. 6 months later, only 14 of Cramer's 49 stock picks closed higher. 28% success rate. That's much worse than a coin flip. And here's a silly comparison, but I bring this up to help you really think about things. Again, this is more in jest than anything, but I think it's pretty funny. Simulated results of 100 monkeys throwing darts at the stock pages in a newspaper. And clearly we don't use newspapers anymore, but whatever. The average monkey outperformed the index by an average of 1.7% per year since 1964. Burt McHale claimed a blindfolded monkey throwing darts at a newspaper's financial pages could select a portfolio that would do just as well as one carefully selected by experts. McHale was wrong, stated Rob Arnett, CEO of Research Affiliates. He said the monkeys have done a much better job. Excuse me, fighting a cold here. And again, I bring this up for jest, but really to get you thinking, how easy is it for you to call the market direction? And if it's as easy, you probably wouldn't be here listening to me, right? Again, what I'm going to show you today is for the most novice to the most professional in terms of trading and experience, designed to save you time. Let me throw up a poll real quick, get some feedback here so I know where to spend a little bit of time. I won't spend lengthy time in anywhere really, but let's go here and ask a couple questions. Give me some feedback. Have you ever traded options before? I'm going to comb through some option trading things. I want to know what kind of experience you all have so I know where to spend my time. Couple more seconds and I will close this out and share the results. Okay, we're about 75-25, right? Okay, that's good. It's good feedback for me. One step further, and I could do this later, but I'll just do it now since we're doing polls. Have you, so for those who have traded options, we know 75% of you have pretty much traded options. Have you ever traded option spreads? And if you know what an option spread is and you're comfortable with that, put yes. That just tells me that you have a knowledge base there. Okay, a couple more seconds. And this is good. Okay, this gives me some good feedback here. This is what I need. Okay, we're about a 50-50, not quite. A little bit more, a little bit more of you haven't or aren't comfortable with option spreads. We'll go through that. Perfect. Appreciate the feedback. This helps a ton. So let me go into here again. I promise for those who are veterans here, I'm not going to spend a ton of time, but I want to give a fair viewpoint for people to see. And for the novice, sit back, relax. I'm not going to blow your mind with anything here. I hope I make you really comfortable in the possibilities that are in front of you. Let me just make sure I'm sharing. Okay, perfect. We're back to what are options. So let's review an option. An option is a financial instrument or tool associated with stocks, commodities, and other assets. They can be bought or sold in anticipation of the underlying asset price moving in the predicted direction. There are two types of options. There are call options and put options. Call options, right, not the obligation to buy the underlying asset. Put options, right, but not the obligation to sell the underlying asset. Strike price is the price where the option can be exercised, and the premium is the dollar amount paid or collected by the buyer or seller of the option. With options, there's always an expiration date, so there's time value built in. So a buyer is considered long. He or she pays the premium to the seller. The seller is considered short. The seller collects the premium from the buyer. Really that simple. To bring in a more simplistic idea of how an option would be used, let's use real estate. Might be a little bit easier for you to envision here. Let's assume we have land worth $100,000. You may want to buy the land for $110,000 within a year. The owner of the land sells you a call option. You pay $8,000 premium for the right, not the obligation, to buy it for $110,000 between now and expiration of 1 year. Strike price, $110,000, premium, $8,000, expiration 1 year. If land value moves to $135,000 within a year, you may want to exercise your call option. Your option is now in the money by $25,000. So $135,000 current value minus $110,000, which is your strike price, gain of $25,000. You paid $8,000 premium up front, so your profit is now $25,000 minus the $8,000, which gives you $17,000. On the other hand, the seller lost $25,000 on the land appreciation, but gained $8,000 premium when you paid for that option. So net loss of $17,000. That's the idea behind an option. Hopefully that gives you kind of a view of how you might use it in the stock world, right? Same type of thing. Now I'm going to jump from options here, and I want to talk about indexes. Again, something that's, okay, so here we go. Sorry, I'm just checking some notes here on questions, making sure I haven't missed anything. Okay, so I've transitioned from options. Now I'm talking about indexes, and I think everybody's comfortable with what an index, but Investopedia says a market index is a weighted average of several stocks or other investment vehicles from a section of the stock market, and it is calculated from the price of the selected stocks. Market indexes are intended to represent an entire stock market and track the market's changes over time. These are the common ones. We hear about it all day long, right? How are the markets performing based on how's the Dow doing, the NASDAQ, the S&P, a favorite for U.S. economy, right? That's referred to over and over again. Why stocks over individual stocks? Well, most indexes are very, very liquid. They're heavily traded by the pros with tight bid-offer spreads. They're convenient. It allows you to follow just one or a few indices rather than thousands of stocks or ETFs, mutual funds. Diversification. It's a basket of a portfolio of stocks, right? Rather than just one stock. They're less volatile as a result. A large movement in a stock index may be 3% in a day, and we've seen some of those over the last 2 quarters. However, individual stocks can move 10, 20, and much more in a day, and we've certainly seen that. Okay, so let's take a look at some graph comparisons. This is the S&P over the Tesla over the last 5 years. You can clearly see where the S&P is. Shorter time frame, 5 days. This is July 25th, 2018. Facebook closed at 217.50. 5 days later, 171.06, a loss of 21% over those 5 days. Meanwhile, at the same time, the NASDAQ closed at 7,932, 5 days later at 7,630. A loss of 3.8% compared to 21%. Much different in terms of volatility. Now, indexes may move in different directions from the individual stocks that make up those indexes, so they can be non-correlated. For example, this is Under Armour. December 6th, midday, trading at 23.90, up 2.4% on the day. The S&P at the same time, down 1.6%. So again, they can be non-correlated. Just because one stock that makes up that index is going in one direction doesn't mean the index will be going that same direction as well. So options, indexes. Now, I want to get you thinking about insurance companies. Have you ever really stopped and thought about how insurance companies make money? Or maybe why they cost so much sometimes, right? Well, their idea is to receive more premiums compared to that of claims. Well, that has to be the case if they're going to be a profitable business. They're paid to assume and manage calculated risk. They sell time. They're forced to be patient. They insure themselves. They're consistent in their business plan. They use probabilities, favorable long-term odds. Okay, think about that. Okay, think about how they make their money and how they do those things. Let's jump into a casino. High probability. We always talk about the house's money, right? Playing with the house's money. High probability trades. Do you think that a casino knows its odds of success with every game they offer? Let's take the game of roulette. If we were to bet 38 times on a single number, win once and lose 37 times, well, the winning bet pays 35 to 1. So we would win $3,500. And on the other 37 spins, we would lose $3,700. So a net loss of $200. An average loss of $5.26 per spin. The house's edge, 5.26%. And do you not believe that they know this? Of course they do, right? They know their odds. When all of us from this room walk into the casino, they know their odds. We all think we're the lucky one, right? The house knows it will pay out winnings and sometimes large. So one of us is going to get lucky every once in a while, right? It's going to happen that way. But the house knows its odds of all of us walking in. Favorable long-term odds tells it that all of our money combined, they're going to be net ahead, right? Even if one or two of us are lucky in the room. So high probability trading, many base hits, not swinging for the fences. Think about this. I love this comparison. This is Rod Carew. In 72, Carew led the AL in batting, hitting 318. He had no home runs. Think about that. 318 with no home runs. 75, he won his 4th consecutive AL batting title. And he joined Ty Cobb as the only players to lead the major leagues in batting averages for 3 consecutive seasons. In 77, Carew batted 388 and won the 77 AL MVP. He had finished in the top 15 in AL MVP voting in every season between 72 and 76. Talk about consistency. Base hits. Would you not want to do the same thing with your trading? Use strategies that are designed to collect base hits. You'll have to pay some claims at times and sometimes large, but the goal is to receive more in premiums compared to that of paying claims. Base hits, not swinging for the fences, allows you to have higher batting averages. Be the house, right? Focus on high probability trades and ensure ourselves, and use the best tools and technology to do it. And the best part of all of this is the time efficiency, little time commitment to make this happen. And I know what you're thinking, okay, well, I don't know where to start. What am I selling? Who am I selling to? All of this, right? I'm going to get to that. We'll make sure you're very, very comfortable there. But wouldn't you want your ideal platform to avoid the stock picking, to automatically generate strategies, to be able to collect premiums and automatically manage your profits and risks, and be that one tool that you really need, and be simple with little time commitment, and apply it to bull, bear, and flat markets, of course, right? That's what we'd want. Here's what our clients say. With my busy schedule, AltaVest is ideal platform. It allows me to see how my trades are going in an instant. I love the trade alerts that keep me informed when I'm traveling. The staff are always there to help when I'm in need of more information. Now, I'm going to jump in before we get into demo, and I want to walk through some scenarios here of what call spreads are and kind of design them here in front of you before we go into the platform and demonstrate it from there. So a number of you mentioned you aren't comfortable or haven't traded credit spreads here. So let's break this down. Credit spreads, they may be non-directional. It's an insured position. It has a maximum reward, which is the premium collected minus any commissions or fees. It has a maximum risk as well, which is the difference between the short and long option strike prices. Again, I'll give you visuals to show you all this. And it has a maximum risk, and the maximum risk and reward are predetermined. You also may be familiar with this term and maybe not even understand what it means, but insured or uninsured or not covered, naked options, we trade no naked options, okay? So I'll show you everything we do in terms of spreads are covered, and we'll walk through that. So this is a visual of a call spread. The red line, the 28.75, is a sold call. The blue line, the 28.95, is a bought call. So let's break this down here. Just for terms of this trade, if I were to have done this trade, I want the market to stay lower than 28.75 by expiration. Whatever period of time that is. In this situation, looks like it's a January, that purple going down there. It looks like a January option expiration. So I would want this is the S&P, to stay lower than 28.75 by that given expiration period. Really, it's that simple. Now let's break this down. A call spread, to sell a call spread, you short a call and long a higher strike call. So I'm going to sell the call, and then I'm going to turn around and buy a call. A bear call spread is considered a bearish to neutral strategy. You collect premium by selling calls. You give some of that back and then limit your risk by buying a higher strike call. And now you have a maximum reward, which is the net credit minus commissions. And this is how you'd break it down. So for example, let's say we sold a call at 28.75 for 4.5 points. We then want to manage our risk and hedge that position by buying a 28.95 or protect it, right? That's going to cost us 2.25 of the 4.5 we received. The net premium now is 225. That's what I'm placing the trade for, a gain of 225 premium. I can do the same thing on the put side. I can sell puts and protect them the same way. A put spread or a bull put spread, known as, is also neutral to bullish. You collect premium by selling puts. You limit the risk by buying a lower strike put. And now you have the maximum reward, which is net credit minus commissions and fees. Let's break this down. Let's look at it. Let's say, for example, we sell a 26.15 put for 3 points. We then give some of that back by protecting the position some and buying a 25.95 for 1 point. Leaves us with a net credit of 2. That's the idea behind a credit spread. Selling something higher or lower that we don't think the market will get to over that period of time. If I were to combine those two together, you've probably now heard the term iron condor. That is what an iron condor is. It's the combination of the bull put spread and the bear call spread. It looks like this, okay? Now I'll back up here. Condors are used for range-bound trading, right? They're non-directional strategy to collect premium. We want the index to stay between the short call and short put, as the visual shows here. So long as the market does, I keep the premium that I was paid and I walk away, go on the next trade. That's what I'm doing. That's what you're looking to do with an iron condor or a bull put spread or a bear call spread, okay? That's how simple it is. Now, why an iron condor? Go back to how easy is it for you to call the direction of the markets and for the experts to do so. Do you have that crystal ball? Well, selling option spreads can be really high probability trades. Let's talk about some probabilities. There's a term you'll hear when it comes to option trading, that's delta. Delta is the chance of the option that you've bought or sold expiring in the money. For example, if an option has a delta of 25, that means there's a 25% chance that that option will expire in the money. Vice versa, there's a 75% chance that it will expire worthless. Delta isn't static, so it will increase or decrease as the underlying asset moves and as time goes by. Another term, time decay. An option is a decaying asset. It has a very limited lifespan. Option traders refer to time as theta. Unless the underlying asset is moving favorably, the option price or premium is 0 at expiration. By selling options, we can take advantage of theta decay. This is what it looks like on a chart. You can see there's a whole bunch of value built in the beginning of the option and how it really falls off as the option goes into expiration. Now, here's the best part of what we provide. We want trading to be for you like watching paint dry. Kind of silly, right? When you think about it, nobody wants to watch paint dry, but really when it comes to your trading, you do, because it's simple and boring. You may be thinking, okay, well, if we can't pick the direction, why not just work on a mutual fund? Well, here's an interesting article done by the Wall Street Journal. They looked at Morningstar, and Morningstar gives mutual funds up to a 5-star rating. And they said of mutual funds awarded a coveted 5-star overall rating, only 12% did well enough over the next 5 years to earn a top rating for that period. 10% performed so poorly they were branded with a rock bottom 1-star rating. Now, the interesting note here is in the chart, for all of the measured periods of time, which are 3, 5, and 10 years, 5-star domestic equity funds were more likely to turn in a 1-star performance than a top one. So we're prone to chasing performance all the time, right? And it's really not our fault. We're wired very similarly. We deal with fear, hope, greed, anxiety, frustrations, and boredom when it comes to our trading. And they're big pitfalls when it comes to our trading. Interesting comment by Mark Lindheim, head of strategy at Alexander Forbes Investments. He says, unfortunately, humans are all wired with this built-in bias, which can lead us to make poor investment decisions such as chasing past performance and or selling out after market correction for fear of losing more money. And what does your calendar look like? You've got everything on it and you're going to squeeze in your trading? You've got all the right tools but don't know how to apply them, or vice versa? And we tend to overcomplicate things, right? Now, we got a large room here, so maybe this makes sense to a few of you, but most of you are probably like, I have no idea what this is. We tend to overcomplicate things and talk about complicated. On the next screen, I'm going to show you one option chain, one expiration period of time for options. And I want you to be able to tell me, what are you going to buy or sell here? Let's play through that. This is just one expiration, just one. Look at all the choices. Do you know what to buy and sell here? Here's the good news. With our decades of experience, we've seen a thing or two, so we know a thing or two, and we're going to help you avoid sitting in the chair and being the crash test dummy here. Okay? The secret weapons here, it has arrived. You guys will love this. It's a completely revolutionary way to trade options. It's called Theta Trader. It's income generation. We're selling time and more. We're using option spreads that are automatically created for you. Okay? You now have a proprietary algorithm that creates what we call theta trades. Same strategies sophisticated traders and pros use for bull, bear, and flat markets. And now your risk and profit controls are completely managed for you. You have an RTI tracking your trades for you. You'd love this. I'll show you all of this. What our clients say, a superb trading platform, and I applaud the attempt to make it even better. It allows a person who has minimal trading experience to enjoy the benefits of sophisticated trading, including the use of options with futures. So before I go into demo, I want to call you to take action. Tony Robbins says change is inevitable, progress is optional. And I heard a recent study that said that 95% of change just happens to people. Only 5% proactively seek to make change. Well, you're taking time out of your day. You've signed up, you're here. I think you're part of that 5% are looking to be proactive in making those changes. So when you see it, take advantage of it. Plus you're going to want to anyway when I introduce it to you. So here we go. Let's demo. I'll go back and forth between screens. Sometimes they drop. Just use that questions pane. Let me know if something goes wrong or you got questions, and we'll go through this demonstration here. Okay, so I'll move my screen around so I can see a little bit better. You're now looking at Theta Trader. You're looking at the dashboard. Let me just pause for just a second. Okay, this is Theta Trader at the dashboard. I mentioned early on that this is designed to be simple. This is designed to be effective and take minutes to do. So I'll explain it to you, walk you through it, and then I'll show you how easy this really is. The dashboard, it has 4 components to it. I'll grab a pen. So you have the theta trades, which are the pre-built option spreads, iron condors, credit spreads, however you want to refer to them. You can see the strategies listed here, and you can see the markets. So you have the S&P, the NASDAQ, the Russell, and the full-size S&P contracts. These are the electronic, which most of you would probably end up trading anyway. You have tabs for neutral trades to populate. You have a tab for bearish trades to populate. And if you're bullish, you can choose those there. And again, these spreads will be pre-built for you. You can look at those in place right away. You then have the current quotes, how the markets are doing at the moment. So you've got the S&P, the NASDAQ, the Dow, Dow and the Russell listed here. And you can see, so S&P down 20 at the moment. This delayed information, so it's a little less than that right now from what I can see. And then you've got the account statement, okay? All of your information is here, so it's pulled in rather than having to toggle back and forth between a couple screens to see what's in your trading account. It's all pulled into one screen where you can see it right in the front. You got the cash balance, the market value, available capital, things that you need to be able to see as you're trading. And then the last component, and probably your favorite component here outside of just having the trades built for you, is now you have what we call an RTI, this tracking tool that doesn't make sense to any of you right now. This color-coded system that helps you know whether I should be holding the trade or whether I should be getting out of that trade, okay? The DTE is days to expiration. How much time is left on this trade? So there's 1, 3 on these two trades, 10, 17, 24, 31, 35. You can see that. You also see the RTI. This, let me explain. In fact, I'll get rid of all my scribble marks and I'm going to look at my, see if I can get you a better visual here of that RTI and explain it to you so we can go back and forth. Okay, so okay, you're now looking at the RTI. It's a color-coded system designed to help you make decisions on your trading. It's really simple because it's designed to keep the emotions out of the game. If your trade is green, so once you place the trade, right, you find a trade you like, you place it, it gets filled, now it's tracking. If it's showing green, great. No action needed, let the trade do its job. You are selling time. So you check back in the next day. So it's green. If it's blue, that's even better. It's high in profits. You need to bank those profits. You need to look to bank those profits rather than holding them to expiration. If it's yellow, so again, blue is going to help you manage your profits. If it's yellow, it's cautionary, much like a street light. No action is needed, but it is drawing your attention to the trade, saying, hey, pay attention a little bit, maybe a little bit more tightly than you had in the coming day or two, and see if there's action that needs to be taken. If it's orange, this is where I really believe you'll love working with us, because now you have somebody that's very experienced, that's done this before, that you can talk about trade adjustments, fixing that trade, whatever you want to call that, roll or whatever, or just closing the position out entirely. You've got somebody to talk that through with, okay? And then if it's red, that's our line in the sand saying, hey, that's as much risk as we're willing to take on these option spreads. We're getting out and either executing our exit strategy or just flat out getting out. Easy, it's that simple. And why? Because emotional trading gets the best of us. So keeping it simple, consistent, should help you focus on taking care of the bottom line. Okay, let's go back to Theta Trader now that you see it a little bit better, that you understand it maybe a little bit better. Back to the dashboard. And you can see the RTI now, and now you know what it's saying. So I've got a trade with 1 day left. Hey, I'm certainly heavily on. This is a weekly trade. Placed a few days ago. I've got a yellow going into expiration today, and I'm certainly on this, and probably with the market being down, based on what this position looks like, I've already banked my profits, and I'm probably out for the day. Or I can sit and let it run to all the way expiration if I really wanted, but I'm probably banking profits and going, right, rather than let it go all the way to 2 o'clock this afternoon. 3 days left. I've got a green and I've got a blue. I should be looking to bank that trade, right? It's 100%. I can't make any more on that trade. I should be coming out of that trade. Same thing here. I got 24 days left. It's blue. Should be banking that trade, right? The rest are green. No action is necessary. I'll just give it another day and see how they go. It's really that simple. Now, if I want detail on any of these trades, that's easy. I just click on this area. It's going to populate all of my open positions. And then I can choose the trade I'm looking for, right? Highlight it, and then it's here. And I can see the chart below, see how that's going and what's happened. And you can see I could have gotten, it should have been getting out of this some time ago. I could watch through that and go through all of that. All the details there, what prices you got filled in the beginning. Whoa, I just blew this up on you. See if I can, there we go, that's better. So all of the details there. You can obviously exit your position, generate an order here, Everything's just really, really simple. You can even set your protocol in your account to trigger you out of this trade if it's blue, rather than even needing to come in here and say I want to place this trade. You can immediately just have it anytime it triggers blue or red, it will kick out an order to close the position. It can be that simple too. Okay, so that's that. Now I want to show you really how this risk thermal works on a day-to-day basis, right? Rather than looking back. Let's walk through a scenario of the trade. I'll grab the simulator here. And now this will let us populate theta trades from any period of time. Let's go back. We all know we had some heavy volatility in fourth quarter. So let's take a look at some things here. Maybe let's start here. Let's pick Halloween, set some trades going into the close of the year, and watch us walk through them as if they were live for us. So I'll choose, let's give us a couple month time frame, 52-day trade. There's my setup, right? Again, with the iron condor, or imagine if it was just a sold call spread or a sold put spread. I want the market to stay lower or higher than that red line, okay? This is the S&P 500. So again, back to our conversation on volatility. I'm going to show you some real volatility in the index, but I want to also show you how those options look in comparison to it. So I'm selling a call at 29.30 on the S&P and a put at 23.55. That's nearly 600 points from top to bottom. And how much does the S&P move on a daily basis? Right? Currently, we're down 12 points on the S&P. Okay, so that's a very, very big move, and we've certainly seen some big moves, and I'm going to show you that. So here, you have a profit loss column, and you have an RTI. I want you folks, you're going to be focused on the profit loss because that's what you're used to anyway, right? How emotional is following this? Now I have this RTI that can help me make decisions and help me to understand what I should be doing with the position. So watch those two columns. Let's look for, now that you understand the RTI, in terms of decision making, let's look for something to tell us to do something with the trade. So I'll push play and we'll go through a few days. We're about a week into it, finally turned profitable. We've been negative on the trade, but finally profitable. Getting more profitable. And look, with 26 days left on this trade, I'm now blue risk thermal. I've made 75% of what I stand to make. That's it, right? When I sell premium, that's as much as I can make. I can make only 100%. It's predetermined how much how much I collected up front. So I can't make any more than that. It's 75. I've made 75%. That's $69 of the 75%. So that's close to $100 on the trade, something like that, right? But why not bank that? I've got almost a month left on this trade. Almost a month for anything to happen, and that's plenty of time. So why not bank that? And that's what it's telling me to do. Bank it, move on. If I don't, let's play through this. You can see it gets a little worse, but it's fine. Back to blue and down. And now I want to show you, now we got volatility coming in here, right? It started here and here. Actually, it really started up here, but we're going to have a swift move right down here on the S&P 500. And that is from 2790 to 2503. So nearly 300 points in just a few days, couple weeks. That's a pretty big move on the S&P, and we all know how December was. But look where my strikes are, right? Even in the midst of all of that, I'm still quite a bit ways away after a significant drop. Now I'll go show you another example, and we'll take the full drop into consideration here. Let's go back. I'll pick more into November and let's trade through January where we know the reversal will finally happen, but you'll get the full brunt of the downward move and how fast and swift that was. So if I look, pull up, somewhere in that third week of November, let it populate the trades for that day, and then let's choose about the same time frame, about 2-month window, so we can get the full brunt of the move in. You all know what we're looking for with this trade, right? I want the market to stay higher than that 2300 put, which is what I've sold on the S&P, and the 2890. So again, nearly 600 points, right? Big, big spread. Focus on those two columns, and let's play through this. See, early on, I've got yellow. Okay, it's telling me, hey, warning, pay attention. The market's really gone straight up here, so pay attention to that. Whoops. Drops, and it's going to start dropping. Now, I've gone from positive on my results to negative, and then I've now triggered orange. So I have 29 days left. I have a full month, and I'm orange on this trade. So that would tell me I need to be moving, right? I need to be adjusting that position. That's way too much time to sit here and see what happens. I want to be consistent and efficient in my trading. So I'm going to look to make that adjustment. If I don't, I got to get rid of my pen. Sorry, I got to go back and forth. Then next day, it's already telling me you need to move out of the trade. It's red. That's our line in the sand, right? We're not taking any more risk than that, and we are out. Look at the movement on the S&P on a daily basis, right? 71, 72, 18, 33, 17, 50, 44. I mean, really moving. And now we're finally getting to a point where we're triggering out. I point that out to illustrate high probability trades. That took a big move to cause us a problem. And they'll happen, and they will happen, and you'll see it again. But we all know how the markets go, and picking direction really is hard. Why not let the market do its thing, right? Go up and down and sideways and up some more and back down some and do its thing, because that's generally what it does. Okay, so I'll erase all this. Let's go back to our dashboard. Now imagine you've just logged in for the first time. You're just checking on your trade, seeing how things are going. You can see, okay, I've got a yellow, I got some action take on blue. Everything else looks fine. I'm getting out. I don't need to place a new trade. I'll log out, check again tomorrow. Or I want to check again, so I click on these trades here. Now I showed you how to track a trade, and I skipped right over how to place a trade. Let's go into that right now. Okay, so we know how to track them. We got to learn how to place them, and this is the easiest part. So if I get my pen, well, I populate, yeah, I get the pen. Apologies, just takes a second to go back and forth. Oops. So now you can see I have a few selections. So if you're into weekly options, you're going to see a couple choices. 6 and 10 days, 17, even kind of a shorter time frame. And then you have things that are, a month or longer to pick from. Now, and the number one question I get, well, how do I know which one to pick? Well, that really depends on you. Is this your first trade? Are you already have a couple trades on? Well, we want to separate those trades, right? We don't want to be trading all in the same time frame. So pick something that's a little different. So you have a few choices here to look through. Let's say we like, I actually like this 38-day trade and this end of month. They're fine for me. Let's take a look at either of those. Erase. And choose it. All I have to do is click on it. and it will populate the information for the trade. Now remember, I said these are all pre-selected, right? You don't have to do anything. It populates everything you need to have. I'll change the quantity here and we'll walk through everything. I'll do more, probably more consistent what our clients might do, a little higher than that. But now I've clicked on the trade. I've got the market. I've got how many days are left on this trade, the expiration date. I can see the cash required to place this position. So in order to place this position, I need to have $4,530 in my trading account. It tells me to sell a 2630 put, right? Sell a call at 29.55, buy the 2610 put, and buy a call at 29.75. There's my strikes. Remember, I'm selling the 2630, so I don't want the market to go lower than that 2630 there. And I don't want it to go higher than 29.55. And let's look at the deltas. So the delta on the 2630 is basically 10%. So it has a 10% chance of expiring in the money, or a 90% chance of expiring worthless. Same thing here with the calls, right? A 93% chance of expiring worthless, and about a 7% chance of expiring in the money. So we're using high probability trades. The money I need, the 4,530, I'm looking to make a profit of $470. That's the potential profit, PP. $470. Return on cash, a little over 10%. And annualized on this 35-day range of about 108%. All the information is there. Now, most of us like to look at charts before we place trades. And so rather than, again, going back and forth with all of the different sites, just click on your chart right here. And it's going to populate your strikes compared to where the S&P has been trading for the last 60 days. And you get a good view from where it's come from, how volatile it's been, and you can analyze that and say, you know what, I like those strikes based on this time frame. I'm going to go ahead and place this trade. I mentioned early, everything you need, nothing more. Not all the extra bells and whistles that just aren't useful. All of the things you need to be simple and effective and done. So when I hit place, that places the order for me right away. This is a demo account, so immediately is going to show it as filled, and you can see that there. But if this were your account, it would have placed a trade, and it's trying to get the trade filled now. Once that trade fills, it goes right back to the dashboard, and now we have a 5 lot 2630 put right here. Okay, that's the trade we just put in. And now it's tracking, it's got an RTI built in. It doesn't have any data because it's brand new, but at the end of each day, it will update and adjust that information. Now also, I'll point out that this is not flickering colors all day long. This uses end of day data where you can be practical and consistent in your execution. Most of the time, what we have isn't going to really depend on the given day, unless you're in a scenario like the 1 or 3 days, or you want to pay attention to what's going on intraday. But most of these trades, since they're so high probability and they're green, they're really nowhere near action point. So every day it'll update at the close after the close of the markets, compute all the information and spit it out to you. Okay, so you can be consistent in that approach. Again, everything built for you, everything done for you. You just need to figure out which one you want to do and place it, and let the RTI do the job of tracking the trade for you. Okay. Okay, before I hop out here, any questions? Anything I didn't go through, or maybe I skipped over that isn't making sense? I'll watch for this. If you guys have anything, throw it in there. I can circle back to the demo here. Let me go back to the slides. And let's change your screen. And I'm getting a question. Bernard's asking, how are these trades identified? Good question. So we use our proprietary mechanism to build the trades each evening after the information comes in from the current trading day, and then that's put out there. Okay, and I'll cover some more information as to maybe how you would help further identify which ones to trade for yourself. But that's how they're built, using that proprietary mechanism. And then Bruce is asking, will there be a copy? Yeah, there will be a copy that comes out to all of you for attending today. Okay, do you feel like this kid here? Do you feel like I'm just making you drink from the fire hose and it's just so much? I hope that's really not the case. I expect this to be very, very simple. For the most novice trader, it will take us a day or two to get you really comfortable with the idea and how it's going and how to use it. That is it. This is literally designed for minutes a day. Remember these 5 areas where we struggle: market direction, income generations, the ability to automatically trade, to manage our trades. Well, this is what Theta Trader does, right? It has a market bias indicator built in. It helps you focus on income generation, high probability trades, those base hits. It has that automated trade management, the RTI, and it builds trades for bull, bear, and flat market strategies. And it's designed for the minimal time frame. Clients say, I've been doing iron condor trades for about 6 years. Your indicator is the best tool for monitoring trades. I promised that our time would be well spent. I know I don't have ample time to just go through everything, so I want to make sure you know how to get involved. And you may be thinking, okay, how come I didn't know about this before? Doesn't matter, you're at the right spot now. Remember, you can be the most novice, the most professional here. It doesn't matter, you'll love Theta Trader. Now let me circle back before I get into further. I think I got a couple questions. Yeah, Bruce, good question. And the other two I'm just going to get to right now. But do you have to have a trading account with us? Yeah, if you want the platform to work, that is the case, and we'll go through that. So there's 2-tier membership structure here. We offer Theta Trader Pro and Theta Trader Pro Elite, and I'll go through the differences. I'm going to come through the similarities because there's a number of the same things. Let's go through it, and I'll make sure you know the difference between the two membership statuses here. So with Theta Trader Pro and Theta Trader Pro Elite, you get the market bias indicator, you get the Theta trades, everything you just saw on the demonstration. You have access to all of that: risk thermal indicator, trade simulator, and trade builder, which I didn't even get into. You can take your own trade, plug that stuff in, and it will spit out your trade and help place it for you. Okay. Whether maybe you want to buy a call, maybe you want to buy a straddle, maybe you want to do something completely different, you can throw that in there. So the platform, everything, total yearly value of $3,588. With that, you get the newsletters, you get daily commentary and TradeScope. TradeScope will give you some forecasting, some upcoming economic information, graphs, things like that you want to pay attention to with the indices. Then you also have daily commentary, which catches you up on the trading session for the day. If you missed it, it'll catch you up on what was going on the day, what happened, what moved the markets, what types of trades were done. It'll catch you up that way. So a total yearly value of $2,952. You also have online tutorials that you can review all of this, the risk thermal, things like that. Make sure make sure you're comfortable there. You have access to our social media community. Now here's where Theta Trader Pro and Theta Trader Pro Elite separate. The Elite Theta Trader, this is where you have now access. I mentioned earlier, when push comes to shove on some of your trades, you're probably going to really want some help or hope you have some help. Think about the game of golf. This is a comparison I like to give a lot, because these pros, whether you like the game of golf or not, they're the best in the world, and they all carry caddies. And that job of the caddy is not to simply carry the clubs. That caddy's job is to know the course, know their golfer, know the ins and outs, right? They want to know, hey, don't be landing that ball on the left-hand side of the green. That is danger. Or if they're in danger, hey, should you be going for it or laying up? That's the idea here. If you got an orange, we need to be able to talk about it. You want to be able to go through some scenarios. and you want to know you're dealing with somebody who knows what they're talking about. Okay? Wouldn't you all love that? Of course, right? With Theta Trader Pro Elite, you have unlimited one-on-one coaching. Unlimited. You'll be able to develop a relationship, discuss trade strategy, review trade history, have someone monitor your trading accounts, and receive trade alerts that are customized to your style. This is what I mean by trade alerts. You can make this even less than a minute if you wanted just to receive trade alerts, but you get a text, email, phone call telling you of the trade that's set up, what it looks like, the iron condor or vertical or whatever that's fits you, what you've communicated is a good fit for you. And you can simply take that and click on the green button, and that places a trade for you automatically. Or hit the red button, that rejects it and says, hey, hey, trading advisor, trading caddy, whatever you want to refer to him or her as, this is probably not a best fit for me. I'll look for something else. But everything is in front of you on this on a text. You can view it, see exactly what the parameters are, the risk reward, and hit accept. It places a trade. You don't even log into the site to do so. Okay. For someone who has a busy life and doesn't have time to sit in front of a computer, AltaVest is perfect. The best thing about AltaVest are the trade alerts. I think you guys are going to be singing that tune. Personal coaching, unlimited, with trade alerts, $11,964 yearly value. And ask yourself, how much have you guys already paid for personal coaching in the past? And it wasn't unlimited, right? So you'll also be invited to our insider trading seminars. Well, you'll hear from people like Bluford Putnam from the CME, or maybe we'll bring in Steve Paoletti, who's been on the floor for nearly 40 years. People like that you can glean information from, hear their stories, and share stories with other fellow theta traders. If we're in your area, you'll also be invited to special events. We love to go to ball games, or whether dinner or whatever, and get to know our clients. One of the best parts of the job is actually getting to know you guys. So when we're in your neck of the woods, we'll reach out and try and do something to get to know each other a little bit better that way. So you have Theta Trader Advisory Platform, you have Personal Trading Coach and Trade Alerts, you have TradeScope and Daily Commentary, total value of $18,504. Now ask yourselves, for $18,504, if it was the one thing that worked and it saved you all the time a month and allows you to cancel the subscriptions you don't need and lowers that stress and aggravation levels, would it be worth that money? And of course it would be, right? So we had two choices on how to offer Theta Trader Pro Elite. We could do it for nothing and try to maximize capacity as soon as possible, or we could offer it at a great value and appeal to the elite traders. We want our clients to be with us for decades. We like what we call sticky clients. This is what I mean by sticky clients. I've had an AltaVest account for about 10 years. I've been with AltaVest since 2001. I started with AltaVest back in 2012. AltaVest for 13 years. AltaVest since the beginning, 1999. AltaVest client for over 15 years. This is what we mean by sticky. This is what we want you saying. This is what we anticipate you'll be saying. Total value for everything with Theta Trader Pro Elite, $18,504. And I think you'd all agree if I cut that in half at $9,252, it would be an awesome offer. And of course, I'm going to make you an even better offer than that. But for $9,252, if it offers you the proprietary sophisticated trading, option spreads, and saves you all that time and automatically manages that risk reward and provides you a licensed professional trading advisor who has at least 13 years of experience, is it not worth that money? Well, the answer is simply yes, right? It is. And others have paid tens of thousands to be a part of Theta Trader outside of this webinar. So I'm going to make you an offer. And now it's March Madness, so I'm even going to over-deliver on our value, if that's okay by you. Here's our two memberships, Theta Trader Pro and Theta Trader Pro Elite. Let's go through Elite. There's our normal price, $1,997. That's it. Now, it is March Madness. I appreciate you taking time here. I'm going to deduct it by $1,000, but also, because it's March Madness, I'm going to do an additional 20% if you take advantage of this by Friday. So you have to take advantage of it by Friday, otherwise it's the $1,997. Now, here's your thing here. There's your 30-day guarantee. So you really have no risk except for some time. I know you're interested. I know you want to get going, and now $797 shouldn't be a problem, but you also have it protected with 30-day guarantee. So we really want you to be able to jump in and experience and work with us so you feel that you build that confidence and you're ready to go and be a sticky long-term client for years to come. So if you're done listening to me, don't want to hear any more of the bonuses that will be coming here, go to cf.altivest.com, TT Investing. Don't forget 20 at the end, TT Investing 20, which will show the 797. That expires on Friday. You'll see the clock ticking and everything. It will expire on Friday, and it will go back to 1997. This is a March end of month push, 797, March Madness going on. So take advantage of it by the end of the month, which for us will be the last business day, right, on Friday. You get all of this, 797. Now, for those who are interested in the Pro, don't want the trade alerts and not interested in having any one-on-one attention unlimited, ThetaTrader Pro is normally $997. Now I'm cutting that in half, right at $497, but because again it's March Madness, I'll take it one step further, $247. Again, only good through Friday. Only good through Friday. You have still some access to a personal trading advisor. They'll spend at least 3 sessions, at least up to an hour each, making sure you're very comfortable in how this works and going through everything. Okay. If you have more questions, you can call us at 949-220-2720, but take advantage of this, right? The URL is there, cf.altivest.com/TT Investing 20 to get started right away. We'll receive your information, reach out to you and schedule a time. Now here's some more bonuses for those who are still with me here that haven't already jumped onto the URL and starting to get going. You have bonuses. You have some special tax treatment when you trade this style. You have what we call a 60-40 rule, and you get a simple 1099. So let's take a look at the 60-40 rule. Assume we have a trading account of 100,000 and we generate a 20% return in your typical option trading. That's a $20,000 that needs to be taxed, right? So to assume apples to apples comparison, we throw ourselves in the highest tax bracket, which is 37%. And now our tax on the $20,000 is $7,400. That changes my return from 20% down to 12.6 after taxes. If I do the same thing using the 60-40 rule, that same $20,000 has to be taxed, but the first 60% of it gets to be taxed at long-term capital gains, whereas the remaining 40% is short-term capital gains. That's a tax savings of over $2,000 in the same scenario. So I jumped from 12.6% after taxes to 14.6. Big difference when we're talking short-term style trading. Also, the 1099, you get a simple profit loss statement at the end of each trading year. You don't have to manually keep track of these trades or plug them into spreadsheets for your tax attorney or anything that way. Simple 1099, plug it in, 60-40 rule applies. So you now have 2 choices, right? We had 2 how to apply this or make it or offer it to people. You can first do nothing, take no action, and that's 100% risk-free as well as reward-free. Or second, become a member now in return for tremendous value. Look at that. We pride ourselves, and we have to cap this because we pride ourselves in the highest level of personal service. We can't offer that unlimited one-on-one training to everybody. So we don't know how much longer we can offer this, but here it is through Friday for $797. Why not take advantage of it? You still have a 30-day guarantee on the $797. Their brilliant algo trading system never failed me, and neither did my helpful Altivest advisor. Types of accounts, going back to Bruce's question regarding, do you need to have an account? Yes, you need to set up an account with us, but you can use an IRA. That's my #1 question. Individual, joint, corporate, LLC, or trust are all available to you as well. You want it for even less than $797? You can even have it for free. If you fund your account with $100,000 or more, you'll be rebated the $797. Okay, so ask us about that for details after you get up and going. We'll explain that to you. Make sure you can take advantage of that if that's what you want to do. Remember the 3 secrets of option trading. Experience matters. Full-time trading isn't glamorous, and stock picking is too difficult. Can you see how ThetaTrader attacks those areas? And these areas where we all struggle with the market direction and the strategy and the timing and the consistency and the time, can you see how ThetaTrader attacks each of those problems? Altivest has exceeded my expectation with the pre-selected theta trades. Responding to a trade alert takes a minute or 2, and I do not need to spend time at my computer. Remember this quote by Tony Robbins? take action, right? Change is inevitable, progress is optional. So take action. There's the discount. There's everything you get with Theta Trader Pro Elite. $797 or Theta Trader Pro $247. Whatever fits you best. We want to help you get up and get going and taking advantage of Theta Trader. You guys will love this. If you've got further questions, there's our number 949-220-2720, or just go to cf.altivest.com/TT Investing 20. Fill out your information. We'll receive it, set up a time with you, and get you going. Get you set up on your demo account and moving forward. I appreciate everybody's time. Best of luck with all of your trading, and I hope to have a chance to speak with every one of you, and I look forward to that opportunity. Thanks, guys. Best of luck in all your trading. Have a great day. I do have another question that for those who are still on that. So how much do I have to have in the account? There's no minimum. We do recommend that somebody has, they probably, to take full advantage, you probably want to be trading somewhere 15,000 or more. But you can test the waters with as little as you want. But that's what we recommend. Good question. Anything else? And yes, there will be a recording sent out. You'll probably get that in about an hour. Look for that. It usually comes from GoToWebinar. They'll kick out the recording link. Again, call us 949-220-2720 if you got more questions. Take advantage of this, you guys. We got till Friday to take care of this March Madness stuff. I want to see you take advantage of that. Awesome deal. And again, we want you guys around for decades. So give us a chance. Give us a chance to earn your business.